Welcome back to another weekly analysis video. This analysis is for the week of January 4th, 2026. As always, we'll start off our video with a weekly review of last week's price action and then move on into the analysis. First and foremost, Happy New Year. We're now into 2026. And I do have some plans for 2026, and I'll actually make a separate video as to what I am planning for this channel. And I'll start making teaching videos starting later in February, assuming everything goes as planned and my schedule frees up accordingly. So with that being said, let's go ahead and move on into the review. So last week I was calling for a neutral bias with a slight bullish undertone still. I mentioned this consolidation in the market maker buy model, how I would have liked to have seen price come and raid these highs. I did mention that it could stop in here, and it did not have to raid these highs, and it could come back into this range in here and drift lower. And that's exactly what we did last week. So we did not raid the highs last week, what I've liked to have seen. But again, I had mentioned that I had a neutral bias, and I wasn't too confident because of the time of year it's in. And we're still in that time of year. And we'll get into what I expect for in the analysis in the next clips. However, because we've moved back into this range in here, now we have to weigh some things out as to what it wants to do. But last week we moved lower overall. Didn't really attempt to go higher except for on Friday, where we have this nice wick here. We'll discuss more on that later. But for the most part, we moved lower, and now we're inside this range again. So with that being said, let's go ahead and move on into the hourly chart. Alright, now we're on our hourly chart here. And I want to draw your attention right in this area in here. This is where we closed, right in here. The previous week before the weekly open. Price was in this range in here, and I had mentioned that if it were to be bullish, I ideally did not want to see it come below 25,758, where this purple line is. And if it were to target that, I would like to see it raid these lows, which it did, and then react off of that accordingly. It did not do that. And this is where the neutral bias comes in, the time of year that we're in, etc., where it becomes low probability, and the signatures that would usually be seen for this to be rated did not happen. The neutral bias kicked into play. We went through that level, consolidated around it, and then drifted lower, back into the area here, which we've been working in for quite some time. Working in and around on both sides, higher and lower. So now we're actually back into that range, and we've displaced quite aggressively into it. So we'll discuss more on that going into the weekly analysis for next week as to what could happen. However, as it relates to last week's price action, we moved lower, going through this level in here and back into this range. Did not come back to these highs in here, which was what I've liked to have seen, and that would have been truly a full completion of the market maker buy model. And like I said, it can stop in the middle of it, which is what it did, and it drifted away. So with that being said, let's go ahead and move on to our 15-minute chart for a closer view. Okay, so here we are on our 15-minute chart, zoomed out. Let's go ahead and zoom in on this particular price action in here. Okay, so when we got to this purple line at 25,758, notice how it consolidated, attempted to try to get it back above it here, failed to do so, consolidated until Tuesday, which we started to break down. Now this was later in the afternoon on Tuesday, and then going into Wednesday, New Year's Eve, we had some movement. And then Thursday, which was 6 p.m. on the open of New Year's Day, because we were closed New Year's, we came all the way back up in here, back to this level in here, 25,758, and propelled lower. Now, once we see a displacement like this from that level here, it's pretty indicative that it wants to move into the equilibrium price point. of that particular area. And that's exactly what we did. The equilibrium price point of 25,515 and 24,786. The middle of that is in here, and it hit the very top portion of that and repelled away off of that until the close of the week. Okay? So once we get it below that level, we see it being used as inversion, meaning a reaction that should have occurred here higher didn't occur, and we see that type of reaction here happen as an inversion. So that might be a little bit of a foreshadow as to what will happen going into next week, and let's go ahead and discuss that now. Let's move into the weekly analysis for the week of January 4th, 2026. Alright, so we're back on our daily chart here for the weekly analysis for the week of January 4th, 2026. So as you can see, we had a neutralization day on Friday, January 2nd, and we neutralized the previous day, which happened to be New Year's Eve, Wednesday, December 31st, since we were closed New Year's Day. Okay? Anytime I see neutralization, I try to figure out what direction is it likely to move in after that. And the direction it's moving towards is the downside right now. And this wick right here is very indicative to me of a rejection. However, I am mindful that because we're still kind of meandering around this zone, it's still a neutral bias for me. However, at the moment, I am favoring the downside as long as we stay above the stop run area of the 25,515 level, which is above it. If we stay above this range in here, and we don't go beyond roughly the middle area of this wick that this candle has created in here, we should move lower and start targeting the middle of this particular range, okay? However, we have to weigh out what happens in here. This is the stop run area of the 25,515 level below that. So we're going to weigh out what happens in there. But it looks heavy in here for now. That could all change going into next week. Now it's the beginning of the year, and the beginning of the year protocol is the same type of protocol that you would follow for the end of the year. We're still in low probability conditions. The market is still trying to find itself, so to speak. It really won't start to pick up until towards the middle of February, beginning of February, okay? That's when the market usually starts to pick up for the year, okay? So I do have a bearish bias, slightly bearish bias, keeping in mind of the neutral tone and the low probability conditions that still exist. So that's what we're working with right now. Let's go ahead and move on to the hourly chart and discuss further details. Alright, into our hourly chart here. We can see a more refined view. Let's look at this displacement in here and how it displaced from the 25,758 level. Use that as inversion, as we discussed previously, and move back into this range. Okay. Now, notice how, when we move into an hourly chart, that wick becomes a displacement candle. Okay, if that makes any sense. So my line in the sand, so to speak, for bearishness would be this area in here. I do not want to see it come back above this and start seeing support and then start targeting these highs. That's not what I want to see. If it's going to be bearish and move lower into this area in here and maybe target the lower portion, towards 24,786, it would need to stay above this area in here. And if it comes back to this area, it would need to move away quickly away from that. Okay. Ideally, it doesn't really go back there at all. Ideally, it only comes back to about 25,515, maybe come to the bottom portion and then run away. That's what I'd like to see. Okay, ideally I don't want to see all this displacement closed in. Okay. Bearish bias, slight bearish bias, still under a neutral undertone, / bias as well, okay? Because we have to keep in mind that the beginning of the year is lower probability conditions, and a lot of times signatures that would usually pan out just perfectly fine in the middle of the year or in the fall or in the spring, they usually, a lot of times, they don't work in the end and beginning of the year. So this is what I'm weighing out currently. Slight bearish bias, still neutral on the Nasdaq. Okay, let's go ahead and move on into the 15-minute chart and wrap up. All right, and on to our 15-minute chart here, which we are currently zoomed out of. Let's go ahead and zoom into this area and here price action. Here's that displacement that we've been discussing, and I want to draw your attention right in here. Now, again, this is the area right here between 25,677 and 25,596 that I want to see price, if it comes to here, I want to see it get away from it quickly. Ideally, it doesn't go back there. But I want you to notice how it's already come back there. See how it displaced through that area with these two large down candles? And then we have one up candle. It touches the bottom of this right here and then displaces sharply. That's perfect. I like seeing that. So ideally, in a perfect world, it's already been there. It should not come back here. It shouldn't come back here. Ideally, it only goes to about 25,515 and then repels away into and past 25,272 and into the middle of this particular range here between 25,029 and 25,272. And if we get a little bit ambitious, we can see 24,786 or just fall short of that. That's what I'd like to see. Again, what removes that narrative is this here. If we get past here and start trading above it, finding support on it, and then moving higher, that erases that narrative and we move into a different program. Okay? But for the moment, I have a neutral bias with a bearish undertone, and for the moment, that's what I'm sticking to going into the new year. Okay? Again, the protocol is still low probability conditions because we're in the beginning of the year and the market is still trying to figure itself out and find its way. Okay? So with that being said, that's going to conclude the weekly analysis for the week of January 4th, 2026. Again, Happy New Year to those watching. Take care, and God bless.